Chinese authorities have launched an investigation into one of the country's largest shadow banks, Zhongzhi. This comes just days after the conglomerate warned it's heavily insolvent and has up to $64 billion in liabilities. Well, Beijing police say the company is suspected of committing illegal crimes, and criminal measures have been placed on a number of suspects, though they did not elaborate on the details of those alleged crimes. Zhongzhi's shortfall renews concerns over the ripple effects of China's struggling property sector. Well, let's bring in Shujin Chen, who is the head of China FIG Research, joining us from Jefferies. Shujin, thank you so much for joining us today. How deep and widespread do you think the problems are in China's shadow banking sector?
So first is that China's shadow banking sector, especially including the trust firms, they are largely affected by the property developers' default. For example, if we look at Evergrande's financial report like 1 year ago, they actually have more exposure to non-bank financial institutions rather than banks. And also for non-bank financial institutions, they are lending to relatively lower quality borrowers or lower quality projects than banks, so they are more vulnerable comparing to banks. The overall scale of non-bank financial that are affected is, exposure to the property sector is quite hard to calculate. But overall, we expect around at least 1/5 of total trust firms' assets had exposure to property sector.
Who in China is mainly negatively affected by this trouble in the shadow banking sector?
Basically, there are because there are some entry barrier for investors to invest into non-bank financial institutions, especially trust firms products. So they are mainly affect high net worth individuals and middle class people. Comparing to people who comparing to victim in the Henan village deposit issue. These people, high net worth individual and the middle class, are unlikely to get a rigid payment in those cases. So on the one hand is that they are relatively better off than those depositors for Henan village, and unlikely to result in social event. But on the other hand is that these high net worth individuals and middle class people are also buyers of properties in China. So this kind of defaults of non-bank financial institutions also hurt the confidence of these people and hurt the demand for property.